Hi, this is Jim Cramer talking to our energy expert, Dan Dicker. Dan, a lot of people have been putting their thumbs in the air and saying, well, this is the level. 45, we stay at 45 for a couple of days. People say, this is the level. What is the right way to look at it? Do we look at this as the level, or we should be looking at other data?
Yeah, a couple of things to look at in the oil price. One is not just where the bottom is. Everybody wants you to call a bottom.
Right.
But what's important is when can oil actually turn around and start to rally, no matter where a bottom is. And I can't, look, oil is the market is created by speculative play. I mean, in the end, there are people who are buying and selling oil. And ultimately, if I'm selling, mouthwash or soap or a house, I have to make up a reason for you to buy mouthwash or soap or a house. I don't have a good thesis for oil to rally, at least for the next several months. So it's not really about a bottom.
Right.
It's about what the market action will be going forward for the next 3, 4, 6, 8, 10 months in oil, and that's really what will impact what the stocks will do.
I've been puzzling over this notion of there's no guy in charge of marketing at oil, say at Continental. But Continental, they don't have some guy come in and say, hey, Carol, we'll be able to cut back in the marketing right now. I can't really do a lot. We should sell less. That doesn't happen at these companies.
And I think that's, in some ways I can turn that around and make the parallel to the investment banks. I've been trying to talk about this. Nobody seems to make this correlation, but 4 out of the 5 major oil desks shut them down, basically, and they all kind of shut down in the middle of 2014, precisely when oil started to roll over. And there were huge marketing departments that went out on the phones every day, basically selling the idea of oil to both retail and the institutional investors out there.
Right.
And they are gone. The marketing for oil, the advertisement, the selling of oil as a hard asset, as something to be owned right now, really needs a new group to come in and get people to buy it.
Could there be something structural happening with the hedge funds and big mutual funds, and also giant teachers' pension funds? They always felt, we ought to have a commodity allocation.
Right.
That is killing them. Are there people who just say, we ought to go back to either fixed income or stocks, maybe some real estate? Are they just getting out of this as an asset class?
I think there's no question about it. The outflows from these funds have been enormous. And besides that, again, there hasn't been anybody to call them on the phone and say, hey, you know what? This is a moment when to get back in and to have some hard assets against what may be an overpriced stock market or what have you. But really, some of those marketing guys who were doing that are not really available right now.
I was doing some work on Nordic American Tanker. A lot of the rates have gone up, and there are hedge funds that are buying it and selling things forward. I calculate that as a 6% return when it's done by guys. Is that worth it?
I think it's better than that. I'm not sure if you have it. In the Brent market, the contango is way out. It's $11 or $12 for 12 months. For WTI, it's only 8 or 9.
Okay, so
prompt barrels in Europe, for example, that's really the home run when we talk about a carry trade.
Well, these tankers can hold a lot of oil.
And they're all contracted for. That kind of trade idea kind of left the barn about a month ago, because it was done in 2008. Everybody kind of knows how it's done.
Right.
So this time they didn't wait around. They just contracted all the VLCCs they could find to make that free money.
Well, I think the real takeaway of this conversation is that maybe as an asset class, it's diminishing, and therefore you should understand that there's more oil in the market from the financial people than you realize.
I think that's a great way to put it.
Thank you so much, Dan.
Right.